Super Saturday is now run and won, and congratulations to the Labor Party on what can only be described as a fantastic result for them. Today I'd like to talk about some of the things that have come out of Super Saturday and the tax policy of the two sides of politics and how it relates to both our clients, our associates and other people who might be interested. So first, some tax facts. The top 1% of taxpayers contribute 17% of the personal income tax revenue base. This is pretty significant. The top 10% pay 45% of the tax base, and at the other end of the scale, the bottom 23% of taxpayers actually contribute 2% of the tax base. There's some known areas of leakage in tax where people are incentivised or rewarded for taking risk. These are in the areas of capital gains, where we get a 50% discount to, in some ways, mitigate CPI. There's benefits other than cash, FBT. Negative gearing benefits, where you're allowed to claim upfront the costs of holding assets during the ownership period. And superannuation is very tax advantaged, as we know, with 0% tax for those on a pension and no capital gains tax at all. The GST is a consumption and transactional tax, but neither side of politics is prepared to comment on that at this stage, so it falls outside the scope of this discussion. So in essence, if we look to the Liberal and National Party, the incumbents first, they're looking to reduce the company tax rate, and we've been hearing for the last couple of months that their reasoning for doing this is to increase international competitiveness for companies to come to our shores. They're looking to remove a layer of the marginal tax rates, which perhaps not quite as understood, but essentially means they're looking to tax at 32.5% taxpayers between essentially 87,000 and top marginal rate, which is 180,000, removing that third layer of the 37% tax bracket and keeping it at a flat marginal rate, trying to incentivise those who could work a bit harder or take a bit more risk to not experience bracket creep. They're looking to retain refundable franking credits, retain negative gearing in its current form, and to tax trusts at an individual level. At this stage, at least, the Coalition are saying they're going to leave superannuation alone, that the adjustments of last year are sufficient. Their philosophy, if we were to go to that, would appear to be to spread the load, to reward and incentivise those who are able to push a little bit harder to do so, to have a go, and to broaden the tax base by having the top 10% become the top 25%, who are contributing to half to 2/3 of the tax base. On the other side of politics, the Labor Party really have a very different philosophy, and that's fair enough. They're looking for the top 1% to pay more, that those who are most able to contribute to the tax base ought to do so. They're looking to, in my words, punish, but in their words, disincentivise those who are above average performers, to protect the low end, the traditional Labor Party voting base, and to close the loopholes where they perceive them, to stop the so-called rich from getting away with not paying tax. So the Labor Party's policy initiatives are to not allow refundable franking credits anymore, which was the announcement through the Batman by-election and has been subsequently nuanced. So no more refundable franking credits. Essentially means you can get a credit for your franking credits, but you can never get it back as cash. They're looking to stimulate spending further with more accelerated depreciation. This time for assets above $20,000, you get a 20% upfront deduction, acknowledging that you already get 100% upfront deduction for assets less than $20,000. They're looking for a 0.5 Medicare levy contribution for those above 87,000 and a 2% budget repair levy for those above 180,000. They're looking for the CGT discount to be reduced from the current 50% general discount to 25%, acknowledging that there's a grandfathering in process for those with existing assets. It's really a disincentive for future asset accumulation. The company tax rate, the ALP are looking to take back to 30%, and essentially when you read that in conjunction with no more refundable franking credits, they are looking for the tax base to grow through those measures. Consistently, trust distributions to adult beneficiaries also earmarked to be 30%, which would be a great change from the existing taxing at the individual level. And negative gearing, the final sting in the tail, I suppose, is looking to be limited to investment earnings, meaning that negative gearing will not be able to be used to offset salary and wage income. This is a real divergence of tax policy between the two sides of politics, and whilst I think most of society are a little bit disengaged from the debate, for those on incomes greater than 87,000, I think this is a fundamental shift that you need to be aware of. And for those below 87,000 that aspire to go above 87,000 in the future, I think you should also be similarly interested in this discussion. So if we recap again, Liberal Party are looking to spread the load, to bring taxpayers through, have more taxpayers earning more money, paying roughly a third in tax. The Labor Party are really looking for those who pay tax to pay more and to have a big underbelly of people not paying terribly much at all, funded by the highest income earners in society. Thank you for your time. My name's Clinton Peake.